Hey everyone, I'm in Morelia, a UNESCO World Heritage Site, and there is the incredible and most famous Spanish colonial cathedral, which I think is about 1650, something like that. I was reflecting as I came down here that all these people are basically Spanish, which, wasn't great for the indigenous people, but of course all this was 500 years ago. But it certainly makes you ponder the change of demography that's occurring now. As of today, you wonder, okay, where's Japan going to be in 500 years' time? I mean, Japanese history goes back a long way, but they are seriously running out of people. As we've highlighted, 2 million empty houses in Japan, with a population that declines 1 million a year off a high base, 120 million people in Japan, but it's declining at 1 million a year with a birth rate of under 1 per woman, which means that you're way, way short of the really 2.8 children per woman that you need just to maintain the population. So that means in 500 years, there'll probably be no Japanese left. It's a pretty easy forecast. And of course, Japan's not alone. Russian demography is abysmal. European is extremely challenged. And that's where the migration comes in, and where you wonder about where, these countries and what the world will look like in 500 years. Not that I'm going to be around to worry about it. The interesting thing about population, of course, is that several countries' demography is so bad that you can tell that within the next 20 years they're going to have a problem. So, as I said, Japanese population is declining at 1 million a year decline, and that's an accelerating effect. So it doesn't take a genius to work out that you'll be out of Japanese within about 80 years. Kind of incredible, right? I mean, Japan has trees that, identifiably, or at least temples that are identifiably over 1,000 years old. So, just thinking. Anyway, global oil is up in the air at the moment because we're waiting for a major announcement from Donald Trump regarding Russia. There was a thought that he might cut off or punish Russian oil exports, particularly to China and India. It's a little bit difficult for him to do that under the framework he's using at the moment of tariffs, because the word is that he'll put a huge tariff on Russian oil imports into the US, which is a moot point because there are no Russian imports into the US. We could actually use Russian imports from an oil product point of view, because basically M100, which sounds like an NVIDIA chip, is actually a particular grade of Russian heavy oil product, which is used by big refiners like Valero to optimize their crude slates. And we've had some issues with crude quality in US refining recently with the new Mars, the latest expansion to the Mars facility. Chevron's facility is incremental production is producing too much, I think it's acid, and that's causing some problems in US refining, which is causing margins to be pretty good right now, actually, it has to be said. Now, of course, it's peak summer, and, refining, the old line, which I've told you before, is that refiners make 1 in Q1, 2 in Q2, 3 in Q3, and 0 in Q4. That actually changed when the US production growth started in around 2010, and the refiners moved to year-round profitability because US crude has been so cheap and so abundant. One very interesting aspect of how the market shapes up over the next year is going to be whether or not there really is way too much oil supply on the crude side, and what that does to, for example, US crude production, and how the US refiners fit into that. Because ultimately, if there's way too much crude, you're going to start the process of shutting down US production and putting it into decline, and that should tighten the premium, tighten the discount of US crudes versus international, and that would be somewhat to the detriment of US refiners. Of course, there's been a couple of major US refining shutdowns that have also tightened the market. But demand in the US doesn't look great. Gasoline demand is year over year down about 3%. Distillate demand's kind of propping us up, but it's very economically dependent. And really what we're doing is exporting a lot of product. And that's why US refiners are big fans of free trade. So that brings us back to what Donald Trump says. It looks like he's lost it with Putin, which is good. I never appreciated Trump being an apologist for Putin. I thought it was a big mistake, certainly morally. And so I'm glad that he's finally lost it with this guy who's basically a psychopath. So what's going to happen here is I think Trump's going to announce major support for Ukraine. One of the interesting things here is, as we're flipping all these bombs around the world, obviously Iran, support for Ukraine, support for Israel, we're kind of running out of weapons. And the weapons are kind of dependent on the Chinese. certainly for some key elements, and that's a challenge that we'll see how that plays out, because at the moment all the tariffs seem to have been re-ramped, including tariffs on Mexico. One of the really big ones is a 50% tariff apparently on Brazil, which is a big deal for toilet paper, amongst other things, because Brazil is a major exporter of agricultural products, to say the least, and particularly paper, pulp, but also all sorts of things like soybeans. And if you put 50% tariffs on Brazil, it's going to be pretty dramatic for certain US markets. The problem with that particular Brazil call is it seems to be related to Bolsonaro, who's kind of, I wouldn't say he's Putin, but he's not exactly a great guy. But, Trump's nothing if looking for loyalty, and vice versa. So, watch the situation with Brazil. That's kind of a rough one. And the market's begun to really worry about this resurgence and the whole tariff thing that, people had sort of tacoed out of their equations. At the moment, there's an interesting thing going on, which is very inflationary in terms of the way people are playing the market, because the view is that if Trump runs the economy hot, which is what he's going to do, it's in order to inflate away US debt. And what that means is people run out, as we've said before many times, and buy gold, they buy Bitcoin. At the moment, they're buying silver, which is forming a perfect cup and handle, which everyone's talking about, which is a massively bullish technical signal. You can see it pretty easily online if you Google it. You've got major action in copper, you've got major action in uranium. So there's several major commodities that are going up a lot. But at the same time, interestingly, and this is where Brazil comes in again, there's quite a lot of deflation in certain commodities, basically because harvests are being very good. One crazy thing about Russia-Ukraine is that it was a very major agricultural and fertilizer impact on markets, as well as an energy impact. And that combined with El Nino, which was making agricultural nations struggle, into what we saw as a massive inflation spike. But at the moment, if you look at things like the price of sugar, the price of coffee, the price of orange juice, there's forecast record soybean crops in both Brazil and USA this year. All of those things are under deflationary pressure from abundant supply, as is oil. So it's an interesting dynamic, and the inflation outlook simply doesn't look as bad as it did from a fundamental point of view, apart from the fact that the US government keeps printing dollars. Now, having said that, with tariffs, the US Treasury actually had a surplus in June, believe it or not, which is a very good thing. But of course, the sustainability of that surplus is the old question about oil companies. You can cut capex to zero and you can make the free cash flow look great. But the question is, what's the sustainability of that? And we'll have to just see where we go with these tariffs and what they do to the economy. But you have to say that so far the tariffs have not had a big impact other than on Treasury receipts. So as a strategy at face value, it's working absolutely brilliantly. On oil, we're just still waiting for Chevron and Hess. There may well be an announcement this week. It's got to be fairly shortly because they've got a decision. It's just a question of announcing it after approval from the whatever board of French lawyers or whatever is the final decision, the final approval. And the other big announcement is today's one on Russia for this week. The other thing is that earnings start, so you're getting into Schlumberger's earnings on Friday amongst some other big bank results that start tomorrow. You've got Netflix this week and some other stuff, but Wall Street's been on vacation like me for the past week or so. We'll all be back to work with probably higher volumes, although still summer volumes, at least higher volumes than you get during July the 4th week. And it'll be interesting. I think the markets are going to be upset by the tariff stuff, to say the least, again, because it's just so volatile and crazy, especially the Brazil one, which really doesn't have a whole lot of economic justification. It's a political decision as far as I can tell. Okay, that's it. Adios from wonderful Morelia, adios from wonderful Mexico. Let's take it away, Carlos, with a final drone shot, and keep listening and subscribing to what we're doing here, which is global energy from a Wall Street perspective. You've got to have energy, Alex.